Good evening and welcome to Tulare County Voices at 210 Connect. My name is Paul Hurley. I'm usually the moderator for these, and I will be again tonight. Pardon me for not spending a lot of time on my feet this evening. I am recovering from some health issues that I really don't want to go into because a lot of it involves the toilet, which is kind of embarrassing. Tulare County Voices at 210 Connect is a monthly forum devoted to examining issues of community importance. And we have it every month on the second Tuesday of the month. It's co-sponsored by the Visalia Times Delta and First Presbyterian Church, which owns this building. And I always take pains to be express our extreme gratitude to First Press for allowing us to use this space free every month for this exercise. And now, I'm going to sit down. Every landing you can walk away from, right, guys? Our subject tonight is Uncovered California, you plus the insurance crisis. And I think it's fair to say that most of us, probably everybody in this room, I'd guess, are aware that there is an insurance crisis in California especially, but throughout the nation. The New York Times informed me today. It's a quite thorough treatment of the problems with insurance throughout the country. And mostly they're the same reasons that they are in California. Catastrophic claims brought about by natural disasters, floods, fires, etc. And we want to examine that a little bit, find out some of the causes, what this is doing not only to the insurance industry, but also the real estate industry, and maybe see if there are any solutions. We have with us tonight on our panel up here in the room, Tom Collishaw, who is the CEO of Self-Help Enterprises. Tom, thank you very much for being here. Ronna Swanson is long time. We've known each other for a long time, Ronna, right? So let's not go about ages or anything like that, but she's been an insurance agent in Visalia for long enough to have a lot of experience. And Chris Jolly is president-elect of the Tulare County Association of Realtors. Is it Melton Real Estate?
It's Mel's son.
Mel's son, sorry.
And I'm actually, I don't want to be president-elect because my year is almost over. I have been the president for the last 10 years. 10 months.
I was afraid of that.
10 months that seem like 10 years.
I went on your website and never mind, we won't go there. And not in the room, but joining us remotely, and we're very pleased to have Rob Obedoza. And Rob, I'm going to have some help in pronouncing your name, but Rob is an outreach analyst and community relations and outreach of the Community Relations and Outreach Branch of the California Department of Insurance. So, Rob, how do you pronounce that name?
No, you pronounce it perfectly, Rob Obedoza, and thank you for having me. I'm happy to be here.
Great. And you're coming through loud and clear. You're the loudest guy in the room so far. Okay. The folks on the stage, you might want to hold on to your mics rather than try to lean over and talk into them because, for instance, Chris, when you were just talking there, you were a little, you got it. A little light. Okay. I don't know who I want to address this to. Have I gotten all the housekeeping stuff out of the way and everything? Yes. I have? I'm done? Yes. Okay. I haven't done this much. So I was trying to. Whoever wants to take this first. How extensive is the insurance squeeze? I don't know why I used the word squeeze, but and how painful is it for policyholders? And does it affect everybody?
Real quick, Paul, I feel like most of these questions, Rana and Rob are probably going to be the experts. But before she
they
answers,
probably will. Yeah.
I'd like to address this first one and just ask the room how extensive the insurance squeeze is. Let me hang on a second. Let me have you raise your hand if your insurance rates have not gone up a lot more than you thought they should. There are no hands up, Paul. So it's extensive. Go ahead, Rana.
Yeah, and how painful is it? Yeah, pretty painful. Does it affect everybody? Probably will, because most carriers are having to make adjustments and figure out how they go forward. So we can talk about some of the reasons why that is, but it is a squeeze, as Paul put it.
If I'm a homeowner and I've had insurance for a number of years, I've not had any claims, I've had a great relationship with my carrier for a long time, never missed payments, either that or my mortgage. Why should I expect that my insurance is going to go up? Or perhaps even lose it, I don't know.
Yeah.
I mean, it's just a matter of how the insurance companies assess your property and assess risk on your property. Right now, a lot of insurance companies are kind of looking for any reason, really, to pull out of certain areas or certain homes, even if you're not in a wildfire area per se. But for those that are in the wildfire areas, which are the biggest challenges at the moment, insurance companies are kind of finding any reason why they would want to move on from certain areas and certain properties in California. And that's kind of what we at the Department of Insurance is trying to do is keep these insurance companies here, continue writing policies, and especially in those high risk areas where we're seeing most people affected.
Insurance companies are operating at a loss. They're looking for any means possible to save money. Is that what it comes down to?
Yeah, pretty much, yeah.
They are losing money. I mean, the New York Times reported on this months ago. They have real losses, and there's been the reinsurance market was in turmoil for several years during the pandemic. I understand some of that's coming back, but I just wanted to mention, the part of the population that we deal with are all low-income folks, whether they're homeowners or renters in our essentially rent-controlled apartments, and the problem is significant. We've seen 30% increases in our insurance premiums in our rental housing sites, which is unsustainable over time because we are really capped at the rents that we can charge. So we don't have much to get that extra cost from. It's been manageable for us to date, but if the increases continue, it's significant. I would also mention on our single-family homes, which are modest, they're anywhere from 12 to 1,500 square feet. We've seen for newly constructed units, the average annual costs go from about $500 a year, pre-pandemic, to about $900 a month now is what we're seeing. And while that doesn't sound that much, that's per year, that's a significant amount for people trying to qualify to purchase a house because, of course, that insurance cost goes into the same equation with your principal, interest, and taxes. So to give you some idea, that kind of increase means you've got to make about $6,000 more per year than you did 5 years ago to purchase one of our modest homes. So there's significant impacts.
You are in a unique kind of market, so to speak, in that you self-help caters to people who normally couldn't buy a home,
Right.
And are probably struggling even to make the payments on those modest homes that you're getting them into. What do they do? What's their alternative? Do they just got to walk away from it, or just give up on the dream, or what?
Yeah, what happens is the threshold to qualify just keeps going up. And whereas we 5 years ago, we could work with a family that made as little as $24,000 a year, who had steady employment. Now, our minimums are closer to $30,000 a year. But there's other reasons for that, the cost of construction, inflation, and the problems with the supply and
Yeah.
contractors, and also
Well, we've had a very volatile
interest costs.
economy in the
Yeah.
last 8 to 10 years, so it's probably kind of
It's
a mess.
a contributing factor, right?
Yeah.
Yes.
Rob, you're probably the one who's in the best position to address this. And what have been the causes of California's insurance crisis? I think we know what they are.
I mean-
but go ahead.
I mean, there's not like a single event that has gotten us to this point. I mean, I'm not sure who was speaking earlier, but they mentioned a lot of the reasons why over time things have gotten where we're at now. You know, inflation, the rising cost of repair, labor, materials, labor shortages, increasing fraud, where insurance companies are having to pay out fraudulent claims are being felt by everyone in California. And it's not just with the homeowners, it's also with auto insurance. I'm sure a lot of you in the room and across California have felt that in the auto insurance market as well. So, and then again, there's a lot of other reasons how we got to this point. Climate change is a big one, especially with the wildfires. Everyone has seen in these past few weeks, we've had several counties that have already been declared states of emergencies, where we've had to declare some insurance moratorium so that those homeowners wouldn't lose their insurance for at least a year while they're rebuilding through those fires. So, it's not any one event. But also, we are operating as a Department of Insurance. There's certain rules and regulations we have to follow to make sure to make sure these insurance companies are operating under Prop 103, which was voted in about 30 to 40 years ago by the California voters. But since in the last 30 to 40 years, a lot of things have changed, especially in the past 10 to 20 years, where California has suffered some of its biggest wildfires and most devastating wildfires in the state's history. And the way that insurance companies are calculating risk right now, they're factoring in those huge wildfires and assuming it's going to keep happening again and again. And we'll get into this a little later, but there are certain changes that the Department of Insurance is proposing by the end of this year to make sure that insurance companies are able to accurately assess risk a lot better than they have been in the past, which is kind of one of the biggest reasons how we got here as well.
You reference, is it Prop 103?
Prop 103, yeah.
Yeah, it was about 94, maybe 2.
I don't know the exact date, but yeah, it was about 1988.
Okay, it was 88. Well, it was longer than 35 years ago. A lot of people would figure that would have been a protection for California consumers against precipitous increases in their insurance premiums. But it's not protecting them now, is it?
No, well, so like, it was intended, to kind of protect California consumers from unjust or, out of control rising rates. So it placed a cap on how much insurance carriers could raise those rates. But because of those caps in the review processes, then insurance companies can't charge what they want to charge for their products because of those caps. There's also what are called, California is unique with Prop 103, is where we have what's called an intervenor process, where so basically if an insurance company files for a rate increase over, I think it's over 7%, it can be contested by the public and go through a hearing process, which can take up to 9 to 12 months, which kind of delays the process. So what we were seeing is insurance companies were asking for a 6.99% increase, getting that approved without having to go through trial or through a hearing, and then coming back the next day and asking for another 6.9 increase, and so forth and so forth. So they weren't able to keep up and accurately price their insurance products. But also a unique thing with that intervenor process, as I mentioned, is that if they do want to ask for those increases that they feel are necessary, then that intervenor process, where the public process can go through a review of those rate increases, it can, like I said, it can take up to 9 to 12 months. So once those things get actually approved, then that data is already 12 months old that they've been basing those prices and those risks on. So they've got to go through the process again and again, and it's hard for the insurance companies to keep up and accurately price their risk models. So yeah, Prop 103, it does provide protection. We do have consumer protections, certain rules and regulations, and also financial information that insurance companies need to prove that they can still pay out those claims and be solvent in the case of a disaster. But it's also kind of limiting how they can accurately price their insurance products as well.
I'm going to skip one here if you're following on your scorecard at home. How much are premiums rising? And for whom?
I mean, in general, from what I've seen, it just depends on how much the insurance company is asking for. So, I mean, that's all public information. You can check that on our website and take a look at our list of rate increases throughout the Department of Insurance history, and you can see which companies have asked for increases, which ones have been approved, and so forth. Like I said, there's a strict review process that they go through. But we're finding that even with companies asking for price increases, they are still pulling back from the insurance market in California. So it's not, we know that it's not a matter of just increasing rates on the insurance company side. It's also a matter of assessing risk properly. So yeah, even with the increase in rates that everyone has been feeling, insurance companies are still not finding it feasible for them to write policies in certain areas.
Up until, I don't know, year or so ago, they seemed to be just applicable to California or the West Coast. But it's sort of nationwide now. I mean, Florida's got just as big a problem as California does, but they have a little thing in Florida called hurricanes, so that probably has something to do with it. But other parts of the country, the same way. So where are insurance companies going to go? I mean, we sort of figured that, well, they don't want to do business in California, so they're just going to sell policies in Nebraska. But it's not that easy anymore, is it?
No. But I mean, you have to also realize that California, if California was its own country, we'd be the second largest insurance market in the world. So right now, although insurance companies are not wanting to do business or not writing policies in California, like frankly, there's tons of money for them to be made. They want to stay and continue writing policies, but there's just certain ways in Prop 103 and some of the regulations that are currently in place that doesn't allow them to properly assess risk. And we'll talk about that a little bit with the catastrophe modeling and some of the changes the department is proposing.
Does it come down to just an either or? Like company comes to California and says, we can't afford to sell insurance at this rate in California anymore, so you either got to approve a 100% increase for us or we're leaving town.
Say that one more time?
You either got to approve a 100% increase for our premiums or we're leaving the state.
Yeah.
You ever get those kind of ultimatums addressed?
I mean, right now, the biggest ultimatum that we got, I'm sure a lot of people were affected, that I'm possibly some people in the room, was with State Farm. They were unable to raise the rates properly. Yeah, and they slashed policies across the state, non-renewals, cancellations, in wildfire zones, non-wildfire zones. They were probably the biggest. I mean, frankly, they are actually the biggest market share in California. And yeah, they were the biggest company to cancel or non-renew policies across the state.
How much do you say cancellations have increased?
Yeah, no, they have. Cancellations have increased.
How much, percentage-wise?
I don't know how much percentage-wise, but we are seeing that, because again, like the biggest thing with this in the cancellations is those wildfire areas. With the cancellations and non-renewals, we are seeing growth in the California Fair Plan. I don't know if anybody in the room is on the California Fair Plan for wildfire insurance, but that's one of the indicators for us that certain things need to be changed and policies need to be changed, is the growing Fair Plan. The Fair Plan was initially created as the insurance company of last resort. It was created after the Watts riots, when the homes and businesses in those areas could not get insurance. So we created the Fair Plan in the state of California, which is funded by created in the legislature, but funded by the insurance companies, but we've been seeing that FAIR Plan as more cancellations and people are getting non-renewed and unable to get insurance from other companies, even like from the bigger companies or smaller companies in California. They're moving to the FAIR Plan as the last resort. And the growth of the FAIR Plan is not something that we want to see, because we don't want a higher concentration of higher risk properties on a single plan like the FAIR Plan, which is, again, meant as a last resort. So the more properties and growth we're seeing in the FAIR Plan, if there's a catastrophic wildfire again in the state of California, the possibility that the FAIR Plan can go insolvent because of those high risk properties and having to pay out those claims. So our goal is to move people back off of the FAIR Plan into the open insurance market by making more insurance companies write in those wildfire areas, at least increasing the number of policies they're writing in exchange for some of the tools that they've been asking for in California for.
Did you say that the FAIR Plan was instituted in response to the Watts riot?
The Watts riots, yeah.
That's
here in
60
Southern
years
California.
ago.
It was, yeah. So those properties, they could not get insurance for their homes and businesses. So the legislators stepped in, created the minimum, the FAIR Plan as kind of like a last resort. It's meant as like getting insurance while you're looking for other insurance options available out there.
Yeah.
But right now, it's kind of the only option for a lot of people at this point, as far as wildfire insurance goes.
Yeah, back in New York when I used to work in insurance, about 60 years ago, Ronald,
Oh,
we
really?
used to have something called, for auto insurance, called the pool program, and that was for motorists who could not purchase auto insurance any other way because they had a bad driving record. Usually they had many accidents or DUIs on their record, et cetera. So they went in the pool and they got what they could get. Is that kind of like the way a FAIR Plan works, Rhonda?
Right. Yeah. Yeah. Well,
Yeah.
it is meant to be the last resort, but for many people it's becoming the only option. So it's unfortunate because the FAIR Plan was not anything we even turned to until the last few years. So yeah, it's becoming more and more the only option to take care of certain people.
How's it financed? I mean, is the state guarantee the
It is
the claims on that?
through the
or-
pooling of insurance companies too, but yeah.
Oh, they all,
So
yeah.
it has really bloated though, so it's not a good fix for the insurance problem.
And
And
it probably won't be one for much longer if it keeps.
and it's a very stripped down policy, so it's not like a regular homeowner policy. It's very stripped down and limited.
Ooh.
Our clients who use the
Yeah.
FAIR Plan, when they can't get anything else, typically layer it with some more liability coverage or umbrella policies.
Yeah, they have to
Because-
buy a separate, what's called a differences in conditions policy, so that's going to be an extra layer of cost.
Well, that sounds like something to make you sleep well at night, huh?
Yeah.
Since liability, or the liability piece of insurance just came up, I just wanted to mention that for rental housing owners like us, we're seeing a shift where the liability piece is being sometimes non-renewed for things like they want to do, this just came up this week. We had somebody say they would only insure us for, with exclusions for certain dog breeds. Well, the state of California says that we have to rent to pets, right? We have to allow people to have pets, particularly if they're service animals. So the law says we have to let them in. However, our insurance company says we won't cover you if that dog bites somebody and you get $1 million claim. You're on your own, even though we'll insure you for everything else. That's a real problem, right? So we're in sort of the middle ground where do we take that risk of renting to that person, or do we risk them doing a fair housing claim against us? Because that's, we're just getting caught in the middle of those kinds of situations all the time because of the liability.
So you don't get insurance if you have a bad dog.
Right? Got to have a good dog, yeah.
If you got a good dog, good dog. Who can't get insurance at all?
Well, I think everybody can get insurance. The question is not can you get insurance, it's can you afford it?
Yes.
Because it's going to cost a lot of money if there are certain factors. So it's not you can't, it's maybe you can't afford it.
I'm sure they can definitely touch on this as well, but a lot of people are having to turn to the non-admitted or surplus market, like the Lloyd's of London and things like that. So those companies, they're not, they're licensed to do business in California, but they don't have to adhere to the Prop 103 rules. So they can set the limits or they can set the prices to what they deem is proper on their businesses, and we're seeing a lot of homeowners turning away from those. So when we're talking about like the admitted carriers, we're talking about a lot of the ones you'll know about: State Farms, Farmers, Allstate, AAA, those types of things. But I don't know any, or I don't know more of those non-admitted carriers off the top of my head. But Lloyd's of London has been the one that's popped up in my head recently. I don't know if those in the room can speak on that as well.
Isn't that ironic? You know, Lloyd's of London made its reputation insuring clipper ships that would travel to California.
Yep.
Back in the 18th century, 17th, 19th century. Okay. How many insurance companies have left California?
I mean, I don't know if like too many of the larger companies have left. I know a lot of smaller companies have left. I don't know the exact number, but instead of leaving, we're just seeing more restricting. So as these issues arise, the larger companies, the admitted carriers in California, they are either limiting or restricting or not writing new policies altogether. So as their increase in risk, as inflation and everything goes into their risk assessment, they are shrinking their coverage. They're protecting the consumers they already have, and being able to, so that they can ensure that they're able to pay out those claims on the policies they already have. So, I mean, you know, like State Farm, they've been the biggest. Again, they've been in the news, the biggest for the insurance. They're not leaving. They still have tons of business and tons of policies in California. It's just we're seeing more limiting and non-writing of policies as well. Now, I will say, like, because of some of the changes that we've been in communication with insurance companies, we've seen movement in the positive direction. So like a few months ago, Tokyo Marine is one of the smaller insurance companies, announced that they were pulling out all of their business from California. That same day, our insurance commissioner got a call from, I believe it was Mercury Insurance, saying, you know, we understand some of the changes that we're working towards in these regulations by the end of this year. We're going to go ahead and help those customers transition over into our business, because we know things are going to be changing in California to help us assess risk a little more properly, to help us continue doing business in California. So we're seeing movement in the opposite direction, where certain companies are picking up policies. We know Allstate has gone on record saying that once these regulations by the commissioner have been approved, they would start writing new policies across the state immediately, the day after. They've gone on record saying that. You can definitely search that as well. We've also seen farmers opening up their HOA and their condos and their commercial policies as well. So we are seeing movement in the positive direction, not as much as we want, of course. We anticipate that being more positive by the middle of next year after some of these changes are done. But yeah, you're right. There are some companies that have pulled out altogether, but for the most part, we are seeing either shrinking business or not writing policies in certain areas.
Rana, have you had any problem finding carriers for your customers and clients?
Yes, and many of the carriers are going very slowly. So you can enter in everything, and then it has to go through an underwriting process. So they're going very slowly and carefully, and they're getting really picky about claims experience, just like for auto insurance. So there are carriers that will write, but they're pretty picky. So it's moving very slowly through the process. We can get there, but it is slowed way down, and many carriers just aren't writing any new business, period. Not going to happen.
And they want to see a picture of your client's dog first.
They want to see everything.
Yeah.
Everything. Yes.
Yeah, I get it. This insurance is a huge business. I mean, it's, probably multi-billion in California. How does this crisis affect the overall economic climate picture doing business in the state? I know, maybe you don't all have a sort of like macro view of how that's going, but even what do you suspect?
Well, it has a huge impact on our business. We are getting non-renewals and on our rental properties, we're getting scenarios where we're building new product and insurer will insure a single phase but not do the second phase because they want to limit their exposure. We have all these exclusions. So it's got a huge impact on what people are paying in rent, whether they're going to be able to keep units affordable. And, there is real evidence that insurers are also looking at the kind of clientele you rent to. And if they're people of a lower income or people who get Section 8 or some type of subsidy, there is real evidence that they're discriminating against those projects. So I'll tell you what my belief is. There has to be a Community Reinvestment Act for insurance because there is some redlining that's going on in the world. And they're also using these crime statistics for whether they're going to insure or not insure. So,
Because of fear of
yeah,
burglary or vandalism, et cetera. And,
right.
how would that work? That particular
Well,
kind of
what we do with
legislation?
what we say to banks is that you can't exclude areas of the community with your investments. You have to make real demonstrated investments in the lower economic areas of your service territory. So if you're going to take deposits from people that deposit in your bank, you're going to serve the whole community. And there are very real laws around that. The banks get it. They have to comply. And I don't know why we can't look at doing that for insurance companies.
We're about halfway through here, and I just want to make sure that if anybody has a question of any of the panelists to this point, we get a chance for them to ask it.
Hello? Oh,
Yeah.
yeah, it's on. Okay, so my question is, we've heard a lot about what's happening in California. I'm very much interested in what's happening here in Visalia. How is this affecting people buying houses? Are they able to get insurance? How is this affecting me who have insurance? Am I going to lose my insurance? So how does this affect me here in Visalia?
I can address the housing issues specifically. I mentioned to a couple people, my wife does the same business as Rana, so I can address a little bit of that as well. What my wife every day, all day, her clients are calling her because they either got non-renewed and want to know what she can do for them, or they got their renewal that shows a 10 or 20% increase in the premium and want to know how they can get a cheaper insurance every day, all day. She was planning on being here with us tonight. She called me about 5 minutes till 7. Her office is in Tulare, and said, I'm still on the phone with clients and insurance companies, and I still have a list to keep going. So they call her on Saturday. I was sitting next to her drinking coffee Saturday morning, and she was calling into an insurance company who said, what are you doing in the office on Saturday? And she said, well, my house is my office these days. But the answer to your question, in Visalia, if you have not gotten increases in your home and auto insurance, they're coming, and they're going to keep coming. What my wife keeps telling all of her clients is expect for your cost from 2 or 3 years ago to 2 or 3 years from now to more than double. Period. Whether it's already started or whether it's still coming, that's what she's telling people. I'll let you get to that in a second.
That's okay.
Let me get to the housing. I was part of a conversation today, a house I'm selling, that I represent the seller, is being bought by folks who are selling a house. And it's been delayed and delayed and delayed. And today I was speaking to the lender, who's a very good lender and a good friend of mine, who's making the loan to these people that are buying the house so that those sellers can buy my listing. And she said, right now my problem is I can't get insurance. I finally got a quote, and the premium was so high that now my borrowers don't qualify for the loan. Tom had mentioned on new construction, another experience with my wife is that new construction is cheap. Cheap in terms of $900 premium is less than probably any of you are paying a year in insurance right now for your homeowners, unless you live in a brand new house, and a little one at that. You know, it's a 20-year-old house in good condition. You're not going to have a premium under $1,500 or $2,500. I mean, it's just, the numbers are astronomical. So when I'm talking to Diana today, and she says, that's my problem. I'm trying to get them requalified. They're trying to they're raising the deductibles on the policy they quoted, and we're trying to figure out ways to come up with they're just unqualified by dollars a month. And it's because the latest thing that caused that was the increase in the insurance premium. So it's affecting the real estate industry every day. I mentioned to Paul, I came from Long Beach last week, and one of Rob's coworkers was on a live panel with just like this, that I was in a room with a few hundred people, and we meet 3 times a year for the California Association of Realtors, and the last 7 or 8 meetings we've had somebody from the DOI or the commissioner himself address us, because that's how important of an issue it is to the real estate industry.
Ronna, do you have
Yes.
something to add to that?
Well, I just want to, I'm going to stand up for the insurance industry a little bit.
It's not their fault.
Because I know we're the bad guys.
I'm not trying to make
in
them
this,
sound
in
bad.
this thing, but you know, there are many factors that are going into the increase of the cost of insurance. So the cost of reinsurance since 4 years ago has quadrupled for a lot of carriers. So reinsurance is insurance companies' backup. So if you have a catastrophic event, they come in and share the risk with you. And you don't want to be going it on your own, because catastrophic events can occur. So we've seen with Katrina, we've seen with tornadoes, we've seen, I mean, those kinds of events have happened all across the country, and the reinsurance then arrives to share the risk with you. And that's an important thing. Well, the cost for reinsurance has gone way up for insurance carriers. But then one of the things that's really impacting us is inflation, because the cost of building materials and contractors has far outpaced the cost of beef and eggs and milk. So that's been a real pressure. But there's another thing that maybe we don't take into consideration. But last year, my own clients, the 3 largest property claims that I had were 2 were rental properties. The landlords were in between renters and were going in and reflooring, repainting, redoing everything, spiffing it all up. And overnight, at both of these places, a crew went in, removed every fixture, every door, everything, ceiling fans, everything out of that house. You would not believe it. Cleaned it out, including the heating and air unit off of the roof. So those 2 rental property claims were like $100,000 each. And then the other really large loss that we had was a drunk driver who drove through someone's house, uninsured drunk driver, and through someone's house. So the impact of the kind of criminal behavior or disrespect or whatever you want to call it, theft, vandalism, the smaller stuff has been has been an impact too, but those big things, you can imagine for a carrier to continue having those kinds of losses rolling on, and there's no recovery from that other than to pay it out and take care of your client and rebuild the house. So there are a lot of things that are pushing and pressing against the insurance carriers trying to provide coverage for the people that are their clients. I've been doing this nearly 40 years now, and a lot of my clients are dear friends. And the part that is so hard for me, because walking into my office is like walking into a Montana blizzard with about 100-mile-per-hour wind, because there's so much demand and so much panic. But the hardest part for me is people who are on a fixed income, and they're being impacted by the rising cost of insurance. And it's so hard for me because I care about these people. I love them. They matter to me, and we're just trying to help meet their needs. But I will tell you, sitting here in this room, one of the best things you can do for yourself is to raise your deductible and think of your insurance as a catastrophic policy. Because the thing that is hurting people when they're being non-renewed and they're calling me in a panic is if they have a series of claims, it makes it really hard to place them with someone else. And they do want to see everything. They want to know the cause of the claim. They want to have the history of it. They want to see every area that was repaired and fixed and done. So having claims history, in the same way like having a bad driving record, you don't want to turn in every little thing. And a high deductible will certainly keep you from doing that. It will prevent you from doing that. But so the discipline in seeing your homeowner's insurance at this point, in the same way that people, when medical insurance became so expensive, a lot of people went to real high deductibles. The same thing should be true for homeowners insurance right now, because California is in a real crunch as far as property insurance. And hopefully we'll work our way out of this. But there are a lot of factors involved that are really pressuring the insurance industry.
You know, Rhonda, that's a real difficult message to give to a lot of people. If they've been living, let's say, in their home for 30 years, 35, 40 years, and they have had their homeowner's insurance for that long. They've been paying premiums faithfully for that long. They've never had a claim, and now they want to claim the bad wiring that put a short in their refrigerator. And you're saying that's not wise to do.
I know, don't make me cry, because I go through this every day, and there are days when I just
that's what I'm here for, Rhonda.
just want to lay down on my desk and cry. But I'm just trying to prevent them from having problems later on. It is, if you can bear to take care of things yourself, if you can bear it, it's best that you do that, because having a claims history makes it really difficult if the carrier should not continue the policy. And that can happen because there are carriers who are not continuing policies. So I'm just trying to put out a warning there, if you can bear it.
And we all got to deal with the new reality, really. It's not.
It is.
Yeah, okay.
So are you saying
what?
if we raise our deductible, that will help us lower our insurance costs?
Yes.
Oh, a higher deductible will always lower your insurance cost.
Yep.
So it sounds like healthcare, pre-existing conditions.
Yeah.
So I just wanted to clarify, Chris, were you saying that a new construction, if I move into a brand new house, my insurance is going to be less than
Yes,
moving into a house built in 1986?
for the first year or two, and it's going to go up every year after that. But yes, brand new homes are less expensive to insure because there's less risk.
Right. That's interesting.
My house is 5 years old, and I think my policy started at, it's maybe 2,500 square foot house that started at around $1,000 when it was brand new, and I'm guessing I'm paying, I don't know, 1,900, 2,000
So it
now.
doubled in 5
years, it's doubled, yeah.
Huh. And the other thing was how many deals would you say are blowing because they don't qualify anymore? The insurance,
Yeah,
that
that-
they do
that-
the deal, it's an escrow, and they've fallen out of escrow.
Sure, I picked a rare example, but I would say a large percentage, 20, 30, 40% of deals are affected by it in some fashion, and delays occur. So Ron had mentioned earlier that the insurance companies are slow to approve. Every insurance company is doing it different. Some insurance companies will approve it, and you'll be all set, but now they have a 2-week waiting period before it goes in force. So all of the realtors and all the lenders have learned to get their insurance quotes up front. Every day my wife gets these requests from lenders that say urgent, but it's for new construction that's not going to close for 3 months, so she'll go ahead and quote it today when it's urgent, and then she won't hear from them for 3 months, and then they call maybe 2 weeks before she's going to issue the policy, and they want it issued effective this date, and she goes in, and now the premium's completely different because that was 3 months ago's rate. So it's affecting probably more than the 30 or 40 I estimated. Probably over half of our deals are affected, causing delays, different things. But as far as actually blowing deals, buyers being unqualified, that's a fairly small percentage in the single digits.
Yeah, go ahead.
I was just going to say, I think it's important to recognize that Visalia is not where the biggest problems are, because we really don't have the wind, water, wildfire kinds of risks. Different in Three Rivers, different in Oakhurst. That's the places we worry about because getting insurance, because that's where they're just saying no because they're wildfire risk areas. But generally, unless you're in a floodplain in Visalia, you're actually better off than most of California.
Do we have any Three Rivers residents here with us this evening? Property owners, that is? Rats. They're afraid to come. Okay, go ahead.
One of the things that happens are unintended consequences. For example, you try to fix the price of insurance to protect the public against gouging, and you end up creating a shortage, and therefore the customer has fewer choices. And the other is the decline of coverage. You mentioned higher deductible, which is in a way stripping down the benefit. And the other is, I guess, the lender, he only wants to insure the recovery of their loan, so the person who gets the minimum may not be able to rebuild their house based on what the recovery benefit is. So could you address those kind of conflicting things that are going on?
Who are you? Me? That's me.
Whoever
Okay.
wants to take it.
Yeah. So.
We've been put into a dilemma by the people that are trying to protect us, I guess is.
Well, yeah. So in any free market system, the market will bear what it will bear. And from my experience, I'm sure there are some bad actors out there. I'm sure there are some insurance companies that don't care. But for the most part, I mean, everybody that I know cares deeply about their clients and wants to provide a product that's going to do what it promises to do. And so to feel like insurance companies are just gouging everybody for the sake of gouging is unfair because we're not. But there are tremendous pressures on the industry that we're now seeing carriers leaving because they just can't work within this. And there are issues. That is the unintended consequence, because you can't, I mean, if you cannot keep your reserves intact and meet the requirements of being an insurance company that is behaving appropriately by collecting enough premium to do that, then you just can't continue on, which is unfortunate. And there are big issues facing California. There are big issues facing all of us as far as risks, as far as what we're seeing, as far as the kind of, liability claims for, people shouldn't be being sued for $1 million. But it happens all the time in California. So there are a lot of issues that are pressuring, and of course insurance companies get really concerned about that. You don't need very many of those before you're in big trouble with your own loss ratios. So insurance companies are trying to figure out how to balance all of that and still provide a good product and take care of the people that they're issuing contracts for. So, yeah.
Ron had mentioned that there were changes coming. Or proposed changes within the next year or so. Could we hear about those?
We were going to get to those, if you don't mind. We got a couple of other things to cover first. Is that right? Okay. I lost my train of thought. Okay, I'll get back to it. I did want to ask Chris Jolly about how this entire thing has skewed the real estate business market industry, especially in Tulare County, but elsewhere.
I think we've pretty well covered that. It just creates another layer of obstacles routinely, and then occasionally it's affecting people's ability to be able to buy a house. We hit the FAIR plan for a little bit and talked about the high fire. I think Tom mentioned Oakhurst, Three Rivers, Springville. I have a group of clients that I work with that are investors, and in the last 2 years, we've acquired a house in Three Rivers, one on Badger Hill, and one in Springville, and all three of those houses were needed to be insured for more than the maximum amount that the FAIR plan even covers. They didn't have loans on them, so we weren't required to have all that coverage by a lender, but we still want to protect our investment. And so, in addition, we mentioned earlier, so those policies would be, some of them, I think the highest one was maybe $6,500 a year, and the lowest one was probably $4,000 a year for those three properties that we owned. And then on top of that, we had company liability and personal liability policies as well. So it's affecting it. It's affecting it every day at that level. It's affecting Tom's buyers that extra $400 a year is kicking them out of being qualified. From the bottom to the top, it's affecting it. And it's affecting mom and pop investors that own a couple rentals and they can't get coverage on their rentals, or they're paying through the nose for that coverage. It's affecting everybody. And I know Rob is here, and I want to not be, I don't want to talk down about the Department of Insurance, because it's more of a government in California problem than it is the Department of Insurance. But the unintended consequences that this gentleman mentioned are real. And I mean, we've seen it in our history with when they broke up Bell, the AT&T, and then it went back and forth and back and forth. That was the same kind of thing. They're going to protect the consumer, but the consumer sometimes doesn't need that protection. The market just needs to adjust itself. And so since 1988, I guess, I was not aware that was when Prop 103 came in, but since that time, when these rules were put into force and the insurance commissioner's hands were tied to approve rate increases that needed to happen to keep up with inflation and climate change and all the things, every time we hear politicians talk about our problems with insurance, they blame it on climate change, and there's some blame there, but mostly I think it has to do with inflation. You can't fix a house for what you could fix it for 4 years ago, because prices doubled, starting with COVID and kept on going. So we've got these unintended consequences of people looking out for us, and sometimes that doesn't work. It needs the market.
I remember my question I was going to ask Rana. Do you think that the increase in our litigiousness of our society has been a factor in all this? That's the reason that people sue now for like $5 million, where, 10 years ago it might have been $500,000.
Yeah, absolutely. And we're seeing the kinds of claims that you just think, no, that's not going anywhere, and then it does. And it gets awarded. And if they have insurance, then that's a liability claim. So yes, the kinds of things that you see are pretty astounding, that even when contractually, the landlord contractually had already stated this is not to occur, and it did, the insurance company still is obligated to pay.
Is that driving the insurance companies to settle first rather than risk going to a jury and having to pay, 3-4 times what they would have?
Well, certainly they are investigating thoroughly, and if they feel like we don't want to put this in front of a jury because who knows what they'll award, right, then yes, they will reach a settlement. And that's unfortunate because, I'm always wanting them to fight it all the way, which of course they say, don't be ridiculous. They could really award something, but I'm always frustrated because you can see that should not be going anywhere, but they don't trust if it gets in front of a jury. So they have to measure the the risk involved. But yes, our litigious society is costing everybody.
Yeah, okay. Well, it's another factor. I mean, it's not just the wildfire.
It is another factor. Yeah, it's not just the wildfires.
Okay, let's talk remedies. What are they? Are there any? We can get to your question here now, in just a second. Are there remedies? Rob?
Well, okay, so again, I forgot who had mentioned this, but the biggest problem or the biggest thing that the Department of Insurance has been working towards is increasing the availability of insurance policies. Because like right now, as people had mentioned, it's getting harder to find. Options are limited. You've got to go through different channels to end up with a fair plan and so forth. So the Department of Insurance is attacking the problem of insurance availability first. So one of the biggest things that these insurance companies have been asking for, and one of the things that California is one of only 2 states that doesn't do compared to the rest of the country, is allow these insurance companies to use what are called catastrophe modeling. So catastrophe modeling is a data-driven, forward-thinking, forward-looking solution to calculating risk on their policies. Right now, California, again, is only one of 2 states that currently uses historical models for their risk assessment. And as I mentioned, in the past 10 to 20 years, California has had some of its worst devastating wildfires. The insurance companies have suffered some of their biggest losses in the state's history. So with the historical models, they'll take that data from the last 10 to 20 years, and they'll assume that keeps happening again and again and again in the future, and they use that information to assess their future risk. With catastrophe modeling, it will begin to take account and take a look more granular at this approach, and looking at property by property, taking a look at the risk mitigation that the people have been doing. Communities have been getting together, forming Firewise communities, or doing fuel reduction or community cleanup and so forth, and fire mitigation across the state. This is a tool that insurance companies have been asking for quite some time. And in order for them to be able to use these forward-thinking models, they have to commit to writing at least 85% of the wildfire policies in those high-risk areas across the state. And smaller companies will have to increase their policy writing as well, thus increasing the availability of insurance policies in some of those hardest areas that have been hit. I know, like, our department has published a preliminary list of those zip codes and counties that are affected by that. I'm not too familiar with the Tulare County, Tulare area. I know because I'm covering for my colleague Richie, who is your guys' point of contact. I'm not sure if Tulare County is on that list, but basically by increasing the policies in those areas, we're looking to increase availability across the state. In addition to that, there was some discussion about reinsurance, which is the next step in these changes for the commissioner. I believe they're looking at exploring the changes of reinsurance and how reinsurance can be maybe focused on California only risk as opposed to factoring in risk currently across the country with, again, disasters in Florida, Texas, and so forth. So I believe the California commissioner is exploring California insurance risks or reinsurance costs only, so Californians aren't paying for additional risk outside of the state. That's kind of a two-handed thing. That's still up for debate because there's also the thinking that those other states that are lower risk are helping kind of mitigate California's costs and offsetting that cost. But that's something that's going to be up for public review and public comment in the next month or two. So I can send you guys the information once that comes out. But basically, the commissioner will be releasing some draft text for those upcoming regulations, and the public will be able to provide comment and leave suggestions on how they feel about those things. So, and the goal is having these changes done by December 2024. The commissioner has gone on record committing to that deadline by December 2024, and we expect insurance companies to hit the ground running with that. It's not as if they are waiting for these regulations to be finished by December to start working on this. Again, these catastrophe modeling, these reinsurance costs are something they've been implementing across the country. So they've got models in place risk assessment in place, ready to go by the insurance, and we're hoping to see movement and more availability and seeing these markets increase by the middle of next year.
Any other strategies for addressing this?
Well, besides my controversial idea about doing a CRA for, we do price supports for agriculture. Why, at some level, when you have a problem that continues to get worse like this, and the free market is clearly not taking care of all the needs, the government may need to step in at some point, as they do with FEMA, with flood insurance, and there may be ways that they can do that to encourage. My understanding about reinsurance is that most of that is done offshore, and there's not enough domestic reinsurance. When Warren Buffett got out of the business and some others, there's not enough. So these are unregulated by the United States, commerce laws and whatnot. So this is just what I read, but there could be ways that the government could encourage a domestic reinsurance program, or create tax incentives or whatever it takes to build back that infrastructure.
Rhonda, you want to talk? You want to address the whole thing about price controls?
Oh,
I know
yeah.
what you're going to say. So that's
No. I was thinking about this today because how many years is it that we've just every year watched California burn? So what if we got proactive and figured out how we could proactively manage the forest so that we wouldn't have kindling every year for a big, gigantic bonfire? I think there are ways for us to actually be innovative in figuring out how not to burn California every fire season. So that's something I was thinking about, because it feels like we could figure out some of these things so that we would be preventing rather than just accepting every year having things go up in smoke. That's one thing, that we begin to be proactive about trying to tackle some of these things that are occurring. So that's one thing, because we hear it's wildfires, wildfires, wildfires. Well, I think we could manage it better, but that's just me. But then there are things that I think, well, I'm going to go way off track here, so sorry, I'm jumping off track. But
I got time.
I sponsor a car club, and every year we buy K-9 officers for local law enforcement. So last month was our big fundraiser, and then this Saturday we'll be presenting the check. But so I had representatives from Tulare City PD, Visalia PD, and the Tulare County Sheriff's Department there. And it was a lot of fun, just being able to talk with those guys, and they were thrilled to be with people who were just thrilled to have them there. But I was talking about some different things, and the Tulare Police Department told me they had like almost 80,000 calls this year. The Visalia Police Department said we had like 170,000 calls. And they said, we'll catch them, but they're out the door before we're even done with our report. So I think we need to start thinking about some of the issues that are really affecting our communities, and some of the things that are happening. The theft, the vandalism, the vehicle theft, all these things are driving up insurance costs, and unless you've had it happen to you, I mean, I've had a lot of clients who've had cars stolen this year, or catalytic converters stolen, or things stolen from their homes. So unless we begin proactively thinking about these things that are impacting the cost of insurance, uninsured driver accidents are going to drive up the cost of car insurance. These are just things that are happening that I see on my side of it, that maybe we need to get a little more proactive about trying to find ways to keep things from happening before they happen. That's my 2 cents worth, because believe me, it is hard for me to watch what's happening to my insureds that I've had for decades, and how that is impacting them as they're trying to experience how they make the leap to the next layer increased cost in their insurance.
Chris, you got anything to add to that?
I would just say ditto to everything Ron has just said, and maybe a third piece to her puzzle is something we discussed a few minutes ago, litigation and how that affects our liability. I've seen people lately. I think we've all gotten postcards. We've all received postcards from attorneys that asked us if we had smoke damage from fires, and people who have turned those in have maybe got a big payday, $30,000, $40,000, but now they're getting their insurance canceled or non-renewed. So those are the things that are driving up the cost of. Yeah, I'm with you. Good. But that kind of frivolous litigation, it would be the third piece besides for crime and forestry.
Yes, I will say that ravaged our valley. And people who fell for that scam, thinking they'd put some extra money in their pocket, are paying for it now. So, yes.
I just want to add one other thing to this. I mean, we are also allowing people to build and buy homes in places where maybe we need to rethink of whether it makes any sense to do that anymore. And they tend to be vacation homes and the like. And, we watch every year in the Deep South, homes get washed away that have been washed away 2 or 3 times already, and we're all paying for that at some level. So I do think there's some reckoning that has to happen about where we build things and continue to expect insurance to pay for all this stuff.
I'm not saying I'll disagree, but there's going to be a fight over that one when it comes down. By the way, about managing forests, there's a proposition on next month's ballot. I think it's 4.
Yes.
The bond.
Yes, a bond. Yeah, that partially addresses that, improving the health of our forests to make them less susceptible to wildfires. And a number of other things are in that bond too, clean water and
Prevention.
Catastrophe prevention. Yeah, so that should resonate with voters next month.
Well,
I hope.
I'm just kind of so we lived up in the foothills, and in the summertime, you knew you had to go really slow because the logging trucks were coming down. And when you got to a big curve in the road, you just knew, have your window down, be listening because the logging trucks are coming down. The logging trucks don't come down anymore. And I know I love wilderness as much as everybody loves wilderness. And it breaks my heart to see what's happened above us in the forest. But we have not managed our forests well. And there are ways to do that retain the beauty of the wilderness without allowing it to burn every year. I think we're going to have to figure out a way to do that appropriately.
Yeah, Paul, yeah. I had a question. It hasn't been addressed yet. I know it's in your notes, but I would like to know what the insurance company commissioner is doing about something that they got really excited a few years ago, and that's earthquake insurance.
Rob,
Well, to tell you the truth, as far as earthquake insurance goes, that typically falls under the California Earthquake Authority. So after the big Northridge quake, when basically insurance companies wouldn't offer earthquake insurance, that's when the California Earthquake Authority was created. And I think they write like the majority of the policies, or they help get the majority of the policies under the California Earthquake Authority. And I saw some statistics in general, like, yeah, I mean, especially here in Southern California, we've been feeling a lot of smaller quakes pretty frequently these past few weeks, so a lot of people have been concerned about that. But like only 13% of homes across the state of California have earthquake insurance in the first place. A lot of people are opting, as opposed to earthquake insurance, opting towards putting that money towards retrofitting their homes and mitigating the damage in the first place. A lot of people are self-insuring earthquakes. Some people just don't feel it's worth it and don't feel the big one's ever going to happen. But yeah, I mean, all of that does fall under the California Earthquake Authority.
Well, years ago we got registered mail, and we had to acknowledge that we knew that it was mail. Remember that about 25 years ago?
I don't, but Earthquake insurance is kind of like a whole different beast. That's why we didn't really talk about it tonight.
Yeah.
But yeah, I know it's insurance, but it's not really affected by the same way these other types of insurance are, homeowners and other property. Mylene?
Okay. What I'm hearing from at least two of you is that the insurance industry is rethinking itself as maybe just catastrophic coverage, and that maybe it's a little bit like Medicare Part B without Medicare Part A, C, and D, and that is the consumer to adjust our understanding about insurance, that we need to be self-insuring except in the case of catastrophic.
No, what I was saying as far as raising your deductible, if you raise your deductible to like $5,000, it will help you save money, but then that becomes more like it has to be a big claim, not the little stuff, not a $1,000 claim, not a small thing that you're turning in, because I'm seeing a lot of people who have turned in these claims that maybe their deductible was $1,000 and the claim was $1,500, but now they have these claims.
What kind of things?
A theft, a window broke, just these kinds of things that, they figure, hey, I have insurance. That's what insurance is for. I'm going to turn it in. And so,
that's the thinking of a lot of people, though. Is that thinking got to sort of change?
Yeah, insurance is not for every little thing, and that is the thinking that needs to change. Is that, people will say, well, how many times have you heard people say about businesses? Well, they've got insurance.
Yeah.
They've got insurance. That's what insurance is for. So the attitude about unlimited money flowing from insurance companies. That's kind of brought us where we are today too, because if you have insurance, then hey, there might be some money that will go in my pocket, like the smoke and ash stuff that people.
I've got a little more to add on to that. I had a transaction lately that was held up, and my clients had to shop and pay for more expensive insurance because the house they were selling, their insurance company on that house refused to insure them on the house they were buying, even though they were model insureds, because there was an extensive claim history on the house they were buying. And we ended up getting receipts for repairs and all the things that they did on 3 different claims over a 2 or 3 year period. And the total paid out by the insurance company on 1 claim was 0, on 2 claims was 0, and on the 3rd claim they paid $1,200 or $1,500. But because they filed a claim 3 different times, it counted as 3 claims, even though the insurance company hadn't spent any money. And now a different insurance company looks at claim history and says, nope, we won't insure it.
I'm going to comment on the zero claim. Insurance companies look at a 0 claim and think maybe you couldn't come up with a deductible, and maybe that's why repairs weren't done. And so they think they may be buying a claim, and the thing that frightens them most is that it was a water claim and now there's mold everywhere that is undiscovered. So 0 claims can make some insurance companies' hair stand on end. So just to let you know that. So just calling and filing claims is not a good idea.
Why don't you file a 0 claim? I mean, if you can't just demonstrate any damages, why would you?
So perhaps I had damages. I called, filed a claim, or went online, whatever, and then got estimates, and the cost to repair was less than my deductible, and so I either paid it out of pocket, or in Rana's case, I didn't do it, and there was no money paid. But yeah, hopefully I paid it out of pocket. I didn't even dawn on me that could be the case. So.
Well, that's what worries them if it shows 0 paid, but a claim called in, because there was a problem, there was something, and then it never got dealt with. So that becomes a real concern to the new insurer.
How about this one? I've got a new scenario for you, Rana, and I'm sorry I'm putting you off. I was watching my wife trying to issue an auto policy lately. and on one of her big companies that she uses a lot, they've got a little scorecard at the top, and it's got 4 circles, 4 like gauges on your dashboard is what they are, and each one is for at fault accidents, tickets. I forget what one of them was, but the puzzling one to me was not at fault accidents. And so my wife has a scorecard. Every time she issues a policy, it affects those 4 gauges based on the condition of her new insured. And she was worried because she was putting in this guy right then that had had a not at fault accident, and her score was getting really close to the bad line on not at fault accidents. That counts against them.
Next time, I want you to bring your wife so she can tell you. Jody.
That one was crazy.
Go back to the California Fair Plan. Is there any transparency to the California Fair Plan? Is it under the same Prop 103 guidelines, or is it unregulated in terms of its premium history?
Rob could probably address that.
That'll have to go to
No,
Rob.
it does fall under Prop 103. It is under the California Department of Insurance. Transparency, there's a lot of information about the transparency of the FAIR Plan, about what policies they're writing, what areas are increasing, the numbers and so forth. It's all available on their website. But I know, like, this has been a point of emphasis with the commissioner in a lot of the speeches he's given recently, is modernizing the FAIR Plan and increasing transparency with the FAIR Plan as well. So yeah, that's something he's working on as well.
I shouldn't have left this to the last. But how does the issue of climate change fit into any of this?
It's everything. Where it's affecting the costs. Rana rightfully mentioned the increase in construction costs. When you build in wildfire-prone areas, you have to build defensible spaces, and you have to use different materials. So it affects everything up and down. And the fact that we're having the wildfires we're having are a clear, result of climate change. Our drought conditions are reflection of climate change. And I dare say our flooding last winter was also a product of climate change. So I would say it's part of the whole problem, and we have sea level rise where we're getting whole parts of the country that are being inundated by water regularly, and so yeah, climate change is real, and it's
Proposition 4
happening.
addresses that too. Because it would seem that when we're talking about remedies, we've almost got to start with talking about climate change. Am I wrong? Am I too radical?
Huh?
I'm being too radical. I'm sorry.
Well, I don't know how we can get ahead of everything, but I think we can figure out ways to at least mitigate damage and mitigate risk, and that's obviously what insurance is trying to do, is discover ways for our clients to mitigate severe damage to themselves. So I think we're smart enough and ingenious enough that we can try and find ways to mitigate against these terribly destructive situations. So, yeah.
You always had more optimism about humanity than I did.
Oh, I always have optimism.
We're going to let Rana Swanson have the last word on that. We'll please thank our panel, and especially Rob Obedoza for joining us from Southern California.
Oh, I just want
Tom
to make
Collishaw, Rana Swanson, Chris Jolly, thank you all very much. Rob?
Oh, I did want to make a slight correction. I misspoke earlier that the FAIR Plan is not regulated under or falls under the Prop 103 guidelines, and that's why the commissioner is fighting for more transparency with the FAIR Plan, because it was created by the legislation for, as a last resort insurer. It doesn't fall under Prop 103 guidelines, but we are fighting for more transparency with that plan. But thank you for having me.
Correction noted. Thank you. And thank you all for coming. I really appreciate you coming out tonight. We are going to try to get a discussion or a presentation really next month here at Tulare County Voices at 2:10. I think it's November 12th will be the date, a week after Election Day. And we'd like to explore the new Visalia Civic Center, so-called new City Hall. That's been talked about. It's tangible now. At least it's tangible enough to talk about, right, Peter? Unlike in your day. And with that, I thank you all and have a pleasant evening. Thanks.
Thank you, guys. Thank you. Thank you for all you do.
Thanks.